Stock Daily Insights. Your daily market canvas.
Hello everyone, welcome to Stock Daily Insights. I'm Ben, and today, we have some crucial updates regarding the US market and its potential ripple effects on the broader financial ecosystem, including the cryptocurrency market. Tonight, the US is set to release its Producer Price Index, PPI, data. Following that, we'll be looking ahead to a key event next week, the FOMC meeting on September the 18th. This meeting is highly anticipated, as the Federal Reserve will announce its interest rate decision. The market is speculating on whether we will see a 25 basis points, BPS, or 50 BPS rate cut. This decision will likely be one of the most significant milestones of the year. Why? A rate cut typically signals more liquidity flowing into the market. Initially, the US stock market will likely be the first to react. While some might expect immediate movement in the cryptocurrency space, the broader financial markets, starting with equities, will likely be the initial beneficiaries of this liquidity boost. However, predicting the market's exact direction is always tricky. Personally, I never try to guess how things will play out post-rate cut. It's a difficult call, and I never have full confidence in making precise predictions. Instead, I rely on volume analysis and natural trading theory to guide my decisions, which I find yields higher success rates. Earlier this week, in my last video, I provided both long and short strategies. At that time, I highlighted a trading range between $58,000 and $55,500. As we've seen, the price movements have been almost perfectly aligned with those levels. The market touched $58,000 on the upside, and $55,200 at its lowest point, with the price retracing to $55,500 last night. Remarkably, these levels have shown pinpoint accuracy, hitting the 0.618 Fibonacci retracement level. Both the rise to $58,000 and the subsequent pullback have respected these technical levels. The downtrend channel we've been tracking has proven to be highly effective and accurate. This includes the earlier bounce off the 0.786 level, though I found the 0.618 level tends to offer more precision in predicting price reversals. As we've entered a new phase in this market trend, I've shifted my position from short to long. In fact, just last night, I initiated a long position between $55,678 and $55,789, a symbolic range I selected, and it's been quite profitable. I've shared this strategy in my Discord community as well. In particular, I believe the price will continue to rise toward the 0.382 Fibonacci level, which is around $60,500. That's the next key resistance zone, and from my analysis, the probability of reaching this level has increased significantly. A few days ago, I mentioned that the downside risk was very low, and indeed, the market quickly reversed after touching 0.618 and is now moving higher. At this point, the market might be transitioning into an ascending channel, and this could be a great opportunity for traders to consider more long positions. Now, let's discuss the ongoing downtrend channel. We've been in this channel for roughly 3 to 4 months. I think it started around April or May, though I'd love to hear from someone who can confirm the exact timeline. Over this period, the channel has been adjusted 2 or 3 times, but the overall pattern remains consistent. So, why am I now suggesting the possibility of an ascending channel? It's because we're seeing some early signs of upward momentum forming along the lower boundary. Take a look at the chart. We've got 3 distinct lows that might indicate the start of a potential upward channel. Although I haven't drawn it out yet, based on what I'm observing, this could very well be the case. You might even use the previous highs to validate its strength. Now, focusing on recent price action, yesterday's 4-hour candlestick showed a long lower shadow and closed as a doji. According to natural trading theory, this doji is often a signal for a reversal, and some of my community members on Discord picked up on this right away. Sure enough, the market reversed, rallying from around $56,000 to $58,000, a solid 2,000-point move. This 2,000-point jump can be described as a high-probability trade. After seeing a long lower shadow accompanied by increasing volume, there was a strong likelihood for a bullish reversal at this point. Now, some might argue that the candle was red, which typically indicates bearish momentum, but here's where trading experience comes into play. It wasn't just any red candle, it was a doji. This distinction is crucial because it suggests the bears initially drove the price down, but the bulls fought back, pushing the price nearly back to its opening level. This kind of price action reflects strong bullish resistance. With that, this was a perfect opportunity for aggressive long trades. The price has now settled around the 0.5 Fibonacci retracement level, hovering around $58,000. It's been consolidating in this range for roughly 8 hours, maybe more. If we examine the volume, we see the bearish momentum has significantly weakened, which makes sense. For the past 2 weeks, we've been in a strong bearish phase, but now that trend seems to be losing steam. Given this, I think we're entering a new bullish phase, where the market could move upward. Although the overall trading volume has shrunk, especially during the Asian trading hours, which is typical for the crypto markets, the bulls still appear slightly stronger than the bears. Given this context and the previous bullish reversal off that long lower shadow, I'm inclined to believe that Bitcoin's price could continue climbing. However, I'm cautious about making extreme predictions. I wouldn't jump to say it'll hit $63,600 or $64,000 immediately. Instead, I think a move towards $60,500, or the 0.382 retracement level, is a more likely scenario. If we do see a pullback, I don't anticipate a deep one. The most I would expect is a retracement back to the 0.618 level, but overall, I see more probability for an upward move towards $60,500 to $60,600. As for reaching the next level, like $63,500 to $63,600, that's possible but might not happen right away. Keep an eye on tonight's PPI data and next week's FOMC rate decision. Both events are likely to cause significant market volatility. Whether it leads to a price drop due to sell the news dynamics or an influx of capital as the market gains certainty is anyone's guess. Either outcome is possible. So, how do we navigate this uncertainty? My recommendation is to closely watch trading volume. Volume often tells the real story of what's happening in the market. If you can accurately analyze volume data and gauge the balance between bullish and bearish forces, you'll likely achieve a higher success rate in your trades. Pair this analysis with key price levels, such as those derived from the Bollinger Bands, and you've got an effective trading strategy. For instance, the 0.618 Fibonacci level has consistently acted as a point of support in recent price action. I've been following this chart for months, and it hasn't changed. It's a beautiful example of how these technical patterns can be both elegant and powerful. That wraps up today's analysis. Stay tuned for further updates, and don't forget to watch how the upcoming data releases impact the market. Thank you for watching today's market update. For more insights and daily stock market analysis, don't forget to subscribe to our channel and turn on notifications. Share this video with others who might find it helpful, and leave your thoughts or questions in the comments below. See you in the next update.